All right, ladies and gentlemen, hello. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Thursday, ladies and gentlemen, the 13th of November, 2025. Look, what can I say? Finally, the U.S. government is kind of out of shutdown, right? There were some signatures placed, agreements made, and well, we're ready to go. But of course, it's not as smooth sailing as everybody would like it to see because, well, I mean, the problem now is the economic data, which we are gonna get and not, because there are some pieces of information that we're not gonna get from the U.S. I think that there are some talks that some big survey based data like the October NFP. Then there's some other information that where, like I said, where they require actually physically asking people what do they think. So that's where the problem arises. So yes, one thing great that we're out of this nonsense. But we're jumping into another nonsense where now we it's going to be really difficult to trust the data coming out from the Bureau of Labor and Statistics, at least for now, at least for now, until kind of it stabilizes along the way. But anyway, look, what I wanted to pick up in this little video, I wanted to do a quick little update on forex and what's happening in there, because I did on on Monday I did the video on gold, on precious metals basically. But now I think it's time to do the forex update, because you know what, I haven't done the forex one for a while now. But look, before we jump any further, as always, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. Yes, I think that why I'm picking up on the forex world, because, well, there are some interesting setups building up, because we know that the whole focus right now is on indices, on equities, especially tech stocks. The focus is on precious metals, gold, also other commodities like WTI oil, which is kind of falling off the cliff a little bit, but with forex, somehow people are forgetting about that, and I think that this is a good moment to actually jump in there. There are some interesting setups being built. Look, also just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. And let's you know what, I'm not going to spend too much time on the economic calendar, to be honest, and actually, you know what, I'll rather jump into the charts straight away and then maybe pick up on some economic data sets. So yeah, long story short, let's have a look here. So basically, I want to start off with DXY. Now, in general, I have been bearish on DXY, but in my previous videos here, you can check out on our YouTube channel, I talked about this idea that I'm still kind of looking forward maybe to see DXY, the US dollar index, pushing back up a little bit, just to kind of please the consumer, the U.S. consumer, because what I said to you in the beginning of October as well, that at the end of September, that I will be somewhat on the bullish side in the very short, from the very short term perspective. Why? Because again, you need to please the consumer, because everybody's losing their jobs because of AI. This is something that is becoming very frustrating for people. Well, surprise, right? Because again, as I keep on saying, that all the companies think about that they want to do this AI and everything, cost cutting through AI. Well, it sounds all great when you're saying, oh, I'm doing cost cutting with the help of AI, right? Wow, sounds very sophisticated. But the thing is, literally, you mean that I'm just kicking out people, I'm just removing all those smaller jobs, that where people were sitting. Um, so anyway, so yes, for now, like I said, and DXY, the story with DXY with the dollar index, that was more like I said. I was a little bit on the bullish side just to see, like I said, just wanted to see that how far we could go, and it seems how far we can go in this whole pre-holiday period. Now it seems like we have just tested that psychological 100 level in the area slightly above it, and then we started retracing back down. Now I think what I need to do here is I'll remove all the lines. I'll bring back some of them, but most of them I'll remove. But basically, look, we did break back below this upside line. But I think, let me just remove everything, and I think that upside line, given that it was a little bit on the tentative side, maybe we should look at something else. Now, look, first of all, the 20-day SMA seems to be doing a somewhat of a good job here, I would say. Because look, last time we had a hold up here, we did pierce through it, back below it, and then we push back up. So we constantly create these false little breakouts. So my question actually for today even is this going to hold, or actually is it time to see a nice reversal back down here? So I'm not gonna rush. I'm not gonna rush into things. I'm just gonna keep an eye on it first. Of course, if we do somehow see this one push a remaining, or should I say the body of the daily candle, because I'm looking at the daily chart here. If we see the body of the daily candle remaining above the 20-day SMA here within my Bollinger Band, I'm gonna actually consider a possibility of seeing a reversal back up, because, well, let's face it, we're still forming something of a, like, we're forming these higher lows in a way. And another thing here is what I'm seeing right now. If I'm gonna connect, I'm gonna draw this array here from the closing of these candles in a way, like kind of bypassing the shadows here, the wicks. Then if by any chance, let's say we travel back up today and we close above the 99, or let's say this daily candle ends above the 99.40 zone. Ooh, now that would be a nice little signal for me to consider a possible move back up in a way. So this is going to be, like I said, my little idea for now. I would really love this one to play out. Certainly, I have to say that for now, at this point, it does look bearish. However, like I said, I'm not giving up yet. Maybe we could have seen this little move downwards here as a little temporary correction before another possible leg of buying. So just keep that in mind. So let's see, like I said, how today's day is going to play out. Because if it, like I said, if it stays above the 99.40 zone today, well, ladies and gentlemen, I'm going to get a little bit more comfortable with the upside, and I'm going to lean back up, first of all, at least towards the 200-day EMA, and then we'll see. Maybe we'll then we'll go for a test of the 100.50 zone or even higher. But again, let's not rush. Okay, let's go slowly. First, let's see if we're gonna actually get that reversal. But if we do stay below the 20-day SMA today, and we continue to trade below it, well, ladies and gentlemen, I think that yes, this could be destined for a retracement back down, but certainly I will be a little bit more on the careful side. I will initially aim for these little hurdles here, the 98.56, then the 98 zone, and etc. Right? But I'll give you another update, or you can always watch the Markets Talk webinar, which I do every Monday, Wednesday, and Friday. So there's one coming up tomorrow as well. So yeah, you can find it out. You can find it out on our YouTube channel. But basically, like I said, this is, like I said, a very interesting situation right now happening with the US dollar. Let's see if today's US session, which is already kind of kicked off, if it can actually somehow bring this one back up. Let's see. Because let's face it, the markets right now are at all-time highs, but the fact that there is still uncertainty, yes, we got the end of the shutdown, but the problem remains. The problem remains with the data. And yes, all these AI deals which are happening, I mean, they're helping out some individual stocks individually, but overall the market is worried. And like I said, and it's really going to be interesting to see what kind of data we're going to get, how, if we're going to get something at least decent, and of course from the Bureau of Labor and Statistics US, of course. But if we're not going to get anything from them, I mean, look, okay, sorry, let's reiterate that we will get something from them. The question is how good of information we're going to get, how much we can kind of accept that, info as good, decent, accurate information. Well, I kind of have my reservations towards it. But anyway, let's have a look at what's happening with the market, with some of the pairs. Look, I talked about AUDUSD in one of my sessions, Markets Talk, and basically I said that look, if we rebound, if this upside support line holds, and we do see another nice rebound, my next target is this downside line taken from the high of the 17th of September. And there we go, boom, mission accomplished. Now what's next? Well, basically it's this, very I'm approaching this one from a very conservative side. Basically, if I'll wait until we get a clearance of one of the sides here, and then we can do something about it. Do I want to consider a move back down? In a way, yes. Still, I would like to see that, and I'm not going to exclude that, especially if DXY does rally again. But if it doesn't, then certainly yes, a nice breakout here through this downside line could be possible, and then we could aim for our next downside line here. Let me just put that one on the chart. And my next downside, the next target will be this downside line taken from the high of the 30th of September of last year. So it is a little bit on the tentative side, this this downside line, but hey, nevertheless, I mean, we have seen some of tentative lines working out nicely. Let's have a look at other pairs. AUD, NZD, boom, look at this beautiful move. Look, I talked about it as well, and I said to you, I'm keeping an eye on this 1.1590 zone. Yes, we had an overshoot today, a beautiful overshoot. Look at this. But now we have drifted back down, back below this hurdle. So if we continue to trade below this hurdle, back below this 1.1590, I'm considering a move back down. This is what I'm going to do. I'm going to stick to my guns here, and yes, I'm going to consider that scenario. If we do push and stay above the 1.1590, then, well, there is a chance for this one to continue creeping back up. AUD JPY, beautiful push. We stayed above the 100.95 zone right here. So in a way, I'm leaning towards the upside. However, if by any chance we do drift back below the 100.95 zone, then, well, maybe we could actually consider a little bit of a move back down. Let's jump into the EURUSD, ladies and gentlemen. So we're popping today, and we're popping, yes, above this downside line. In a way, everything's pointing more to the upside, but as I said, if by any chance DXY does pick up the pace, then we'll have ourselves a nice beautiful false breakout here. But again, at this point, DXY looks weak, so we're seeing the same story here on EURUSD. So the dollar is suffering, but let's see if we can stay above this area today. If we can, yep, I'm going to continue targeting the upside. If we cannot, maybe like I said, a beautiful reversal back down here could happen. Quick update on EURUSD. I like this one because we're approaching a very key area of support. Look at this one. This is very interesting. Last time we were here was back in 2024. Yep. So this was the low here near the 0.9211, and this is quite a strong area of support, ladies and gentlemen. Oh, actually, sorry, we did reach this area 0.9211. That was back in, yeah, that was back in 2020, back in October, actually. There we go. Oh, that's very nice. At the end of October, we tested that area briefly, dropping below it, and then we rebounded, pushed back up. Now look, what's happening here? In a way, everything's kind of pointing more towards the downside, to be honest. But again, look, I think I'll leave it to you guys if you're comfortable with this or not. So if you want to target this 0.9211 again, then yeah, be my guest. But the only thing is that remember that maybe we're going to approach this 0.9225, 24, 25 zone instead, and then fail to drop lower, rebound, and push back up. However, a lot of bears are going to join in if we do actually see this breakout here. Now that would be a spectacular move, a historic move in my opinion. We are, like I said, we are building history, so let's see if that's going to happen. In general, the low here is right here. If you remember those days when in 2015 the Swiss central bank untied its Swiss franc from the euro, and well, this is what we kind of got. So yeah, but I mean, there's plenty of more room to fall. Let's see if that's going to happen this time. Let's see if we're going to build history. Hopefully, maybe this year. Euro JPY pushing further. Yes, Japanese yen is not the most popular right now. However, don't get me wrong. It could present itself with some nice opportunity if the stock market does reverse back down, because then people will start searching for something, for an alternative, some sort of a safe haven, and basically the Japanese yen could be it. But for now, everything's pointing more towards the upside. We're approaching that psychological 180 zone. I think it's doable, and then we'll go from there. If it fails to clear that 180 zone or continues to trade below it, then maybe there's an opportunity for a drift lower. And like I said, it could align with the stock market kind of maybe shifting back down. Let's see. GBP. Let's jump into GBP USD very quickly. GBP USD. Yes, this one looks still somewhat bearish because we're trading below this downside line here. And this downside line taken from the highest point of September, and if we can continue to trade below it, then yes, another decline here could be possible. Now this hurdle no longer needed. I think it's more important this one here, this 1.3191. If we do pop above it, then my next target is this downside line. But again, I'm not in a rush it a little bit here. I want to see what's going to happen if we can get that breakout through this downside line. Let's have a look at what's happening with other pairs. GBP Aussie. Now this one's near kind of a good area of support. I think we need a good clearance again of this 1.9988. If we do that, then great. So basically we're hovering above that psychological 2 level on the GBP Aussie and GBP AUD. If we do fall and stay below it, I'm going to lean towards the downside here, ladies and gentlemen. Now, let's jump into USD CAD. Now, this one's interesting. My target has been reached. There we go. My target was this little area here and with the 2 lines. 1.397686. I was aiming for that. I didn't really care about, let's say, that I need to see a perfect test or something like that. No. What I needed here is mainly to kind of see a test of this whole area, and I got that, so in a way, mission accomplished. And now what's next? Basically, if I'm looking for some lower levels, then yeah, clearance of this whole area is needed. If we can, and let me just highlight the area which I'm talking about. I think it's going to be better, like just for our future reference here, so we could come back to it. So if we do get this clearance, great, more sellers here could join in. USD JPY. Now this one's interesting because look, we're flirting with this area of resistance, and this area of resistance is roughly between the 154.48 and 80 levels. If we get a nice stronger push above this, then yep, I am going to aim for the upside. I do have this nice little target here, which is the highest point, the current highest point of this year, ladies and gentlemen. That's around 158.88 zone. And if we can get a nice, push again above this highlighted zone, then great, more buyers could join in. But again, like I said, my problem here is that if the stock market does reverse back down, maybe, like I said, the yen will gain interest again, and we could see actually USD JPY breaking the steeper upside line. If it does break the steeper upside line and stays below it, I'm going to lean to the downside. And finally, US dollar against the Swiss franc. There we go. We're breaking the upside line, and we broke it, and well, we're drifting further south. Now look, we're very quickly approaching the next potential area of support, 0.7925. I think it's a doable one. This is the low of the 28th of October. So yep, let's see what's going to happen here first, and then we'll take it from there. If we do break this hurdle, then great. I will go further south, but maybe, you know, we could see a rebound here and a push back up, and maybe like a retest of this downside line right here. Or maybe even better, actually, maybe not the downside line, maybe the 20-day SMA within the Bollinger Band, or the 50-day EMA, which basically kind of almost is coinciding here with that 20-day SMA. Very interesting developments here. It's kind of a lack of trend or something, and you know, then it keeps on narrowing. So basically, it becomes an interesting kind of magnet for the rate to keep on coming back to. So keep your eyes on this. Let's see what's going to happen with the 0.7925 first, and then we'll, if we do break it, then yeah, I'm going to go lower, further south. But if we do continue to trade above it, maybe a little bit of a rebound could be possible. Ladies and gentlemen, that is a wrap. Thank you very much for watching and listening. I really appreciate your time, your views, your likes, your comments, everything. So hopefully you enjoyed this session. Thank you, and I shall see you in my next little video update. Bye for now.